What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. We like to use SOXL because we feel it breaks the mold when it comes to risk to reward in terms of price of entry compared to the reward that you can receive. So we use an SOXL and triple leveraged ETF. Make sure you hit the subscribe button, hit the notification bell. That way you're notified when we release new videos. We do release videos every night throughout the week and once on the weekend, but we release bonus content as well. So having that notification button hit will get you notified whenever we release that bonus content. Make sure you follow us on X at Bullish Chips, where you can receive real-time updates about our entries and exits on not only scalps and day trades, but mid and long-term trades as well. We also offer further commentary throughout the day about the price action for SOXL and just any other information that we think might help traders trade. Just a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day and in the past, but where we believe price action will take us in the future based off our trading strategy and our charting strategy. If you're not familiar with our charting strategy, it is based in the strat. It's not completely just the strat and only the strat, but it's based in the strat. So having an understanding of the strat will help you out. Bear with us through this video. It actually is pretty simple to pick up. So by the end of the video, you'll probably have a good hang of it. But it's based off of the fact that a candle can only be one of three things: an inside candle, a candle that either goes above or below the price action of the previous candle, or a candle that engulfs another candle. So a 1, a 2, or a 3. So there's really like 6 major reversals that we like to play. They offer us very clear entries and exits, and we can calculate the measured move before we even enter the contract. That way we have an understanding of the risk to reward that we're taking in that trade. Along with the numbering of the candles either being a 1, 2, or 3, you take advantage of broadening formations, which is just basically drawing a line from one high to another high and a low to another low, strategically to show price action and indicate where it might go in the future, or has a high percentage chance of going in the future. So again, if you're not familiar with the strat, just hang with us through the video. Probably halfway through the video, you'll have a pretty good understanding of where we're going with it. And then I do have some free resources in the description for this video. You can get this document right here. It's a PDF. There's a link to the free PDF in the description. And I've also put the link to Rob Smith's YouTube page. Rob Smith is the inventor of the strat. So make sure that you check his YouTube videos out and do your research on Rob. There's plenty of information about him and the strat on the internet. So yeah, go ahead and check those out. Also, if you're not familiar with our videos, we do have a color coding system for the broadening formations that we use to indicate different time frames. So after this video, make sure to check out the bonus content, and the video should be titled Precision Setting Levels for Precision Trading. Go ahead and check that video out so you get an understanding of the different color coding system that we have. But again, by the time you get done with this video, you'll probably already know. So just hang with us, and let's talk about this price action, because that's what everybody's here for. We'll go ahead and look at the charts first. We'll take a look at today's price action. Just take a wide angle view, because you always want to keep a perspective of where you're at. You don't want to get too zoomed in. And then we'll get into our triggers and targets for tomorrow. Tomorrow being Friday, the end of the week. So, if you want to play zero day to expiration contracts, 0 DTEs, then, you would definitely want to have a plan, have some triggers and targets for both sides. That way, whichever price action goes, you're ready and you can capitalize and make profit. So that's what we're here for. Let's dive into the charts. What we have up, we start with every day is the day chart, just so we can have a view of what happened in current day's price action. And you can see that we have a 3. And so, outside of the world of the strat, a 3 is considered what's called a bullish engulfing candle. So if you're familiar with that, then you understand what a 3 is. All right, that followed a 2 up. So once again, a candle can be either inside, which is 1, so it never made it outside the low or the high of the previous candle, or you can have a 2. You can have a 2 up, which, like in this case, price action went above the previous candle, so that's a 2 up. And here you have a 2 down, where price went below price action. And again, the engulfing candle when price action goes below and above, that's what we call a 3. So there you have it. You pretty much have half of the strat down already. So if you understand that concept, it's very easy to put together the 6 reversals that there are. None to really talk about right now. Anticipating tomorrow what we could get, and then bringing on Monday as well. We'll get into that reversal strat to both the upside and downside, because we had a 3 today. Those are available. But again, today was a 3, a bullish engulfing candle. We found support off of the level that we were looking for, the year flip, right? This 2813. We've been talking about it for 6 weeks now, right? It was resistance, 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 and now it looks like we're finding some support, right? It hasn't been confirmed yet. We need to get this reversal pattern, reversal pattern going back to the upside. So either a 3, 1, 2 up, so a 3 and then an inside bar tomorrow, followed by a 2 up. That would be a reversal of what started out as a 2 down after a 2 up, right? Or we can get the 3, 2 down, 2 up, which is one of my favorite reversals. It usually leaves you a little bit more magnitude, and it gives you a very clear entry and exit, right? You enter on the high of the 2 down, and you exit at the high of the 3, right? So with SOXL, a dollar can mean a pretty big percent, right? You can see today we only moved 15 cents overall, right? There was a lot more movement through the day, but that 15 cents equates to about a 0.5% in overall movement. So once again, this is another reason why we use SOXL. The beta for the stock, depending on where you're doing your research, ranges from anywhere of 4 to 5.5. So I guess not stock, the ETF. The triple leverage ETF, SOXL, the beta on it is from 4 to 5%, meaning you're going to get a lot of movement, a lot of volatility, and meaning more movement throughout the day than the basic S&P 500 or even QQQ. So this is another reason why we use this, because you get that high beta. But if you look at the especially the options contracts, or just even the stock price, right? It's a $30 stock right now. We made a pretty big purchase at the April 7 low. It was only $10 at that point. So it's already up 3x on that. But even at 3x what we bought it at in April, it's still only a $30 stock, as opposed to SMH. If you want to play, chips, the big ETF to play or to own is SMH. And, that's 10 times the price of SOXL. So you're getting the low entry. So premiums are low, right, with the low cost, but your delta is very high. Your theta is very low, meaning if you buy contracts with time on them, if your expiration is not, the same week, your delta is going to be below 10. I can almost guarantee it, right? Because another reason we're not buying way out long out of the money, we're buying at the money or in the money. And then so you get that high delta to low theta, meaning that even if it takes a day to have an inside day or not have a lot of movement before going into the direction of your contract, you're not losing a lot of value with theta decay, right? And then with that high beta, that next day after an inside day, you're going to get some big movement in whatever direction, and that's where the delta comes in, and the premium starts piling up pretty quick. So if you're using, because it's low premium, you're buying multiple contracts, those really start to add up, and then you can depending on how you trade, you can scale in, scale out, all of that. Put different twists on it, but just from a basic look of a single leg option contract, you're gonna be hard pressed to find your bang for your buck with something other than SOXL. So let's get back to the chart. I'm sorry, I got on a tangent. But we're above the flip, so that puts us in full time frame continuity to the upside. So if you take a look at the upper left hand part of the chart, we have our time frame indicators. So the day is green, the week is green, the month is green, the quarter is green, the year is green, right? And we know that when we have full time frame continuity, you want to be buying in the direction of that continuity, right? Whether it be up or down, because you can have full time frame continuity to the downside, and you can be selling calls and buying puts and shorting the market, right? So just whatever direction is going in, that's if you have full time frame continuity, that's it shows a lot of momentum, right? Because you have all time frames working in the same direction. You don't have any conflict. So you like to start to go longer when you get those. So again, we got poked through yesterday. We got a pretty good confirmation of it today, setting the soft higher low, right? For right now, we're calling it a soft higher low because it is part of a three candle, so it did go down and up. But for the most part, we can just count that as a higher low. That's following a higher low, right? So we have the high, higher low. We have the higher high here and a higher low here. So we've already got a higher high. So that's we're in an uptrend from the day perspective, right? If we kind of stretch this out a little bit and put this, do like that, right? So we're in an uptrend. It's pretty steep, so we can still expect some pullback. Like I said, I like a 3-2 down, 2 up reversal. So I wouldn't be mad at a pullback tomorrow. Kind of catch some bulls off sides, right? That people buying at the highs up here. We'll go ahead and get them. We can buy puts tomorrow or whatever we want to do to capitalize to the downside. But a little pullback wouldn't hurt to just really confirm, especially if we get a hammer candle, a green hammer, so a failed 2 down, and then we get the 2 up on Monday. We're back to the upside and hopefully making higher highs and just continuing to walk back up to this weekly broadening formation. It looks like we're finally beating this monthly downtrend line right here, right? If we switch back out to the month chart, we're handily enforced, right? Making a higher low on the month as well, right? So on the weekend, the month the day, the week, and the month we set a higher low, right? And this was the downtrend line off of these 2 candles back in 2024 and the beginning of 25, right? So there's this downtrend line we were contending with, the year flip, and it looks like we're getting above those, especially the month downtrend line. We just need the confirmation of the year flip. Then we can start to go attack like the higher high on the month, which is also on the week. Maybe looking at the gap up here, just riding this weekly broadening formation, or if we've just really got momentum, pressing through it and just getting to this next weekly broadening formation. We've got to keep in mind the seasonality that we're coming into. Again, August since 2020 isn't as bad as it was before 2020 for tech. So that, probably why we're still seeing this push here in August, but we got to keep our eyes open for September, October. Those are usually, the worst performing months for tech. So not saying that we're going to have a drop in September and October just because that's what seasonality says, but we have to just keep that in the back of our mind, right? So that may be another opportunity that if we continue to push up in August to, push back down and really test this year flip from like the week and month perspective to really solidify it as support before pushing back up, and maybe the end of October, and then November, December continue to push up. Who knows? We're not in the prediction business. We're just laying out what has a good probability of happening, right? And what you would want to see happen if you're a bull, or if you're a shareholder, or if you have long contracts, right? So we've already seen from the month, we've got the higher low. We see from the week perspective, we've got the higher low as well, right? So here's the higher low right here. We made the higher high, higher low. We've already made the higher high. So this week is still, it's not as steep as the day uptrend, but we could call that, we could put a uptrend line there just like we have here, maybe just to show that where it could come back to and still be bullish. So let's just do that. We will mark this. The week colors are always purple, and a small dash line to indicate an uptrend. Large dash lines indicate downtrends. Those are really the only other non-horizontal lines that we use other than broadening formations. Other than that, we really like to stick to horizontal line levels. Those are like real levels, right? You can kind of guess where you would hit the broadening formation up here, but if you have a horizontal level that comes in play with it, where you could pinpoint a better, not to the cent, but give a much more specific idea of where you had the possibility of rejecting or reversing. That's what we like to look for. So that's why we have the year flip, the week flip, the quarter flip, and the month flip out here, right? And these turquoise areas are gaps on the day chart that we still have that haven't been filled. So there's plenty of room to come back on the downside, maybe even fill this gap and make another higher low. Maybe trigger a 1-2 up, 2 down. Again, it's a reversal strat, one of the main reversal strats in the strat playbook. So we could get a 1-2 up, 2 down that, you know, just fills the gap and makes a higher low here, and we just continue higher. You never know, but we'll just keep that in mind. So we've gone over that. Let's just look at everything from the smaller time frame. Let's pull up our scalp chart, right? And we can see that we opened, you know, pretty well down from where we closed the day and almost gapped down, right? We did open inside of yesterday's price, but we did push down and we closed this gap, right? So we can actually remove this. So we closed that gap. And we came back up, and what do you know? We found support on, you know, one of the 4-hour markers. It's not anything special. It's just previous high a day. But we got previous high a day, but you can see where we rejected multiple times before we push back up, right? This is the 4-hour trigger to the downside, right? That's one of our 4-hour markers that we put out there to help us with, you know, the 4-hour strats if we're going to enter something on like a day trade perspective or possibly even swing overnight. So from that perspective, we were above opening print the whole time. So again, our general rule is you're looking for higher lows above opening print to buy calls, and you're looking for lower highs below opening print to buy puts. So, you know, you could stay in calls all day and been rewarded. We were a little bit, I don't want to say trigger happy, but we took our profit, you know, kind of early on our first set of calls, right? Because we got the higher low on the 5-minute, but we came up and made a lower high. And when we made the higher low after the lower high, that's, you know, what's considered consolidation, right? So at that point, we know we're no longer scalping for a short time frame, right? It didn't pop back up after this higher low here. So we were either looking to get out if we made a lower low, or now that the scalp is kind of off the board, we're looking to the day trade, looking at it from that perspective. And that's why we buy a week out. We don't ever buy the same week. You can do what you want to do. It's your preference, but that's what we do. It allows us, again, the delta is pretty high on SOXL contracts, and the premium is low. So we can buy multiple contracts and scalp for still good profit every day. So, but if that scalp doesn't formulate quickly, the expiration of the next week allows us to then look at it from a day trade perspective. So that's what we did. We went ahead and zoomed out to the 15. Well, we have multiple charts up at once, but we went ahead and looked over at the 15-minute chart, and we could see that, okay, we could be putting in a lower high here from a 15-minute perspective, right? So we were doing higher highs, higher lows, right? We had the uptrend yesterday, but today's open broke that, right? We made a lower low on the 15, meaning that any high below the high of the last 15-minute of yesterday would be considered a lower high. So, and that's what we got. We got a lower high here. So we did sell our calls up here, the first set of calls up here, for a very small profit, and we did grab some puts, right? Just because how far we did open up, we almost gapped down. We've already poked down into yesterday's price range. So let's, you know, protect the downside. We still have calls for what was for the 22nd and as well as September expiration. I think the 19th is what it is. So we want to protect those calls. So we bought puts. We stayed down. We left our stop at above the lower high on the 15. Again, follow us on X and you can see our entries and exits in real time. So, and we also update, you know, where we're putting our stops and whatnot. So we did put our stop above that lower high on the 15, which allowed us to stay in it. Again, the puts we bought were for next week. But once we made this higher low here, we entered more calls in more of a straddle position, right? So calls for next week. It wasn't the exact same strike. I think there were 28s and 29s. So 28 28 puts and 29 calls. But we were using the opening print as our stop on those. Again, we put that on X because at that point we knew we were at least bullish from a 15-minute perspective. And then if you zoom out here to the 1 hour perspective, you could see that this 2 down, it wasn't really pushing. It did close at the low, but it wasn't a huge candle. So we were using opening print as our stop. And we were really rewarded because we got stopped out up here with our puts, and we remained in the calls for the squeeze. If you follow us on X again, for that in that last hour, we I think tweeted maybe 2 or 3 times that to watch for the squeeze, and I think maybe 5 minutes after the last time we tweeted to watch for the squeeze, it squeezed, right, and we got out at overnight high. Wanted to get out at actually no. Yeah, check our X. We got out at previous high day and left one runner for overnight. We have AMAT reporting, so it could pop tomorrow. Right now, it's not looking that way. It's down 2.5%. I haven't looked at AMAT's earnings personally, but SOXL is down 2.5%. So that may not come to fruition, but that's all right. We can play tomorrow puts if on any triggers to the downside or not underneath the opening print, or however we want to look at it. But another reason why we did buy puts, if even though we were above opening print, if you look at how we opened, if we look at the internals for QQQ, vol QD was below the zero line and pushing down. Right, it wasn't in trend lower zone, but it was pushing down. The tick opened in trend lower zone and couldn't get above zero line for a while. The breadth ADQD was in trend lower zone all day and never got out of trend lower zone. So there was a chance of the bottom falling out of it, right? It ended up squeezing up, and that leaves thin structure, right, to retrace. And it already kind of did, right? You can see this big wick on that one, but right here, this candle is going to be thin structure as well. So pull back to this level right here for support tomorrow morning would not surprise me, or opening down here would not surprise me. So be it. We can get out of our puts. Get out of the runner that we left for tomorrow. It was up when we closed pretty big. So even if we do lose money on it, it's minimal, and we still have our big profit from yesterday. So overall, the trade is still very positive, and then we just look to play the rest of the day, right? So that's what we have on that. We'll go ahead and get into our triggers and targets for tomorrow. We will map out the expected moves. Let's go ahead and just do that right now. So let's go to the trade. So let's go to today, this week's options chain on Thinkorswim. And you can see that the market maker's expected move for tomorrow is $1.16. We'll round that up to $1.17. So let's go over here to our notes. Let's make some new notes for Friday. Friday, August 15th. All right, these notes are from today, the 14th. Tomorrow, there will be 93 trading days left in 2025. Our close price was $29.42, so let's get that in there. And then we had our market maker's expected move for the week here at $2.26, putting us at a range of $27.97 to $23.45. Obviously, we've got above that. That's not uncommon. I think this is like 60% of the time. 60 or 70% of the time, I think, is when the market maker, price falls within the market maker's expected move. So it's not uncommon to see movement outside of the expected move, especially with SOXL, again, high beta, triple leverage stock, or ETF. So you can see that movement outside the expected move. But again, this is $1.17 as the expected move for Friday. That puts us at $29.42. Actually, let me pull up my calculator so I don't mess up. $29.42 plus $1.17 gives us a high for the market maker's expected move of $30.59. And we have a low, so $29.42 minus $1.17. We have a low for that range of $28.25. Okay. So we can go ahead and put, just like we do for the expected move, right, for the week. You can see the top expected move for the market maker's expected move for the week top right here is $27.97. We put an indicator out there. We'll put one out there for the Friday move as well. We'll go ahead and remove the opening print, and we'll go ahead and put a horizontal level up here. what was it? 30.59. So 30.59. This is the expected move. Top. Oops. And we'll put this in orange because our daily, the color coding for daily indicators for us is orange. So we can see that top of the expected move is there and our bottom is 28.25. Let's go ahead and get that out here. 28.25, and that is the expected move bottom, and we'll make it orange so we know it's for the day. So that's Friday's move, right? Somewhere between here and here is the expected move for tomorrow. So that wouldn't give us a 2 down if it stays within the low or the bottom of the expected move, but it would certainly give us a 2 up, which is bullish. So expected move for tomorrow is more bullish leaning, but again, AMAT had earnings, so we'll just have to play it by ear. Let's go ahead and move our 4-hour markers. So we have, let's make this bigger here. We have our 4-hour trigger to the upside. We'll activate that and move it to the high of the second 4-hour candle of today. We will activate the trigger to the downside for the 4-hour to the low of the second 4-hour candle of today, right? So what that means is if price action in the first 4-hour candle tomorrow goes below 28.67, we have a 2 up, 2 down reversal. So it would be okay to, according to the strat, to enter puts at 28.67, writing them down to the low of this candle, which is 27.95. So down here, right? That would be the trigger on the 4-hour. To the upside, it would be, instead of a reversal, it would be a continuation. So it would trigger at 29.66, and we would use our extended targets, 30.55, which is the 61.8 fib of the 2020, the low to 2021 high, things of that nature to mark our extended targets for the continuation. Because again, a reversal has a clear entry and exit. A continuation has a clear entry but not exit. You have to rely on your other levels that you have out there. So we'll approach that there in a second when we get to the day. To our 4-hour triggers and targets. So let's move the previous high of day from yesterday's high of day to today's high of day, and the previous low of day to today's low of day. And we'll just bring in the extended hours. Just bring in the 15 minutes, and we'll move our overnight high to the overnight high. Again, these will probably move. Well, in the morning, we may have different levels, so you got to move the overnight high and low before the market opens or right as the market opens. And then again, we remove the opening print for today because again, that's just the opening print for today. Tomorrow we'll add the opening print for tomorrow when price action actually opens up. So let's get out of the extended hours, and we can see we've got our triggers and targets here. Just looking from a day perspective, currently we have the overnight high here, previous high of day, and the 4-hour trigger here, 4-hour trigger to the downside here, the overnight low here, expected move for the day here, the year flip here, the expected move for the bottom, for the top of the week's expected move here, and yesterday's low day. So I'd consider this a lot of support. I wouldn't, it's going to be hard to break through it. Maybe AMAT's earnings is what does it. Maybe there's something else that is announced that does it, but it's going to take some, downward pressure, some real downward pressure to break through those levels of support, in my perspective, right, and including this. So what we do know is that, if we do open somewhere in here and we get a higher low on the, if you want to scalp early in the morning, the 1 minute, 5 minute, you get a higher low here, you enter calls, your first target is overnight high, your second target is previous high a day or over 4-hour trigger to the upside, whichever comes first. In this case, they're the same level, so that's your second target. And from a scalp perspective, you could take your profit here if that's where you want to go ahead and exit, because that's a defined exit. Again, after the defined exit, you just have extended targets that you have to continue to just watch the market, watch price action, watch internals and see if you want to remain in those to try and reach your extended targets. But at least if with these moves, you've got defined triggers and targets. Ideally, you open somewhere around here. You get an immediate push down with a bounce off of the trigger, the 4-hour trigger to the downside, showing some support. You poke back above opening print, and you get a higher low here on the 5-minute, maybe even 15-minute if it takes that long, and you enter calls. And you've got from here to here as your first target. Maybe you unload 50% of them there. You unload the second 50% here. Whatever percentage you're going to do, I'm not going to tell you what to do, but maybe that's how you play it. Leave some runners for the extended targets, but it leaves you very precise entries and exits. So we'll go ahead and look at this from the 4-hour and get our notes right. So again, we've got the week mapped out. The week flips red at 26.03. Again, we're above that, so it's not red. The month flips red at 23.57. The quarter flips red at 24.38, and the year flips red at 28.13. So we're full time frame continuity to the upside. We know what the expected move for the week and for tomorrow is. We know what the gaps are above. We're not quite there yet. Quite a ways to go on those. We know what the gaps are below. And actually, we cleared this one today, so we can clear that off of there. And so we know what our gaps are to the downside. They're much closer than these gaps to the upside. So we may still have some pull to the downside, right? Let's go ahead and mark our triggers and targets. Again, it will be a 2 up, 2 down on the 4-hour if we do pull a reversal strat. So here's the 2 up, 2 down. Again, the entry is the low of the 2 up. The exit is the low of the 2 that prior to the 2 up. So our entry would be that 28.67. Right there for the trigger to the downside. The magnitude is going to be the low of this candle, which is 27.95. Right. Our extended targets, I would call this right here an extended target. The low of this candle is 27.70. Oops, we can take this gap close off there because we closed it. And then we had a 27 previously. Let's go ahead and break out a couple of fibs here just to see where we're sitting at. Okay, so this is last month's high right here as well, so that coincides more with the overnight low and the 4-hour trigger to the downside and support that we had. No real clear target in here. Let's bring up. Oops, wrong chart here. The swing, no. Let's bring out the major fibs from the run up. That's 26. That's a pretty big drop. Trying to find something a little closer. Let's do this. Let's look at the flag that we got here. So from this base, right, this is kind of a base, a support. It's right above the 5-6 weeks of range that we've had here. Let's use this last base here, come up to this high, down to this low. No, that's not going to give us what I want. I'm just thinking to the upside. Don't want to try and spend too much time on an extended target for a 4-hour trigger. Oops. Because usually the 4-hour trigger will roll into a day, but we do have this below here, this 27.39, 26.93. So we'll go 27.39 as our other extended target. Right. Again, you don't need a lot of dollar movement to get a high percent movement. We got a lower low right here at 27.90. Is that 27? Yeah, 27.95 is the low of this candle. So we'll just want to make note of that. If we do go below 27.95, we're breaking the uptrend. So we just want to know what level are we breaking the uptrend, right? So let's go ahead and look at that continuation to the upside. And let's bring out that extended, the fib extension that I was trying to draw earlier. Boom, there we go. So we can see we would have the 2 up, right? Triggering at this high. Oh, where's my other? Let's go to this scalp, right? So it shows the previous high day and the 4-hour trigger to the upside is right here, right? So probably our first extended target is going to be this 30.59. That's the market maker's expected move for the top of the move. And the reason why I say that is because if we go ahead and bring up the major fibs from the 2020 run up, let me just show you from a week perspective. If we look at these white Fibonacci lines, right, these represent the 2020 low. We all know what happened in 2020 to the all-time highs in 2021, which actually was the first week of 2022. But that's what these white solid lines are. Those are the Fibonacci's. And you can see where we're at, 30.55. That's the 61.8 fib of that 2020 low to 2021 high, which is the range that we've been trading in since 2020. So it's, you need to take note of that. It's a reasonable point for reversal. And so that's why I'm going to put 30.55 as my first extended target. So 29.66 is the trigger, and 30.55 is our first target, right? So that was our extended target for today's upside. We didn't quite make it there. But if we, and actually it's good to mark, let's look at what we had there before. 29.85, the high for today was 29.66. We had 29.85 and 29.62 as our extended targets, right? So you can see those were pretty much right on point, 29.62. So this 30.55 is going to be a good one. I think it's going to be pretty solid. I would expect to see some pullback, but the higher high on the week and the day perspective, let's get back to our day chart, actually 4-hour chart. This is what we're nearing. We're doing the 4-hour triggers and targets. So if we look at the 4-hour chart, we can see this higher low right here. That's the higher high on the day. That's 32.72, but we've got this 3 here on the 4 hours. So we use this high as the next target. So this is 31.96. 31.96, right? So we could have a lot of momentum here going with the 2 up, 2 up. Again, it's just a trigger. We don't have a magnitude like a reversal. We've got our extended targets, but there's some pretty good extended targets, if I might say so myself. And we've got the higher high at 31.96. The next high is 32.64. So let's just take note of that as well. All right. So again, we've got our 4-hour markers, very precise. We know where to enter. Again, when we're looking at it from the smaller time frame perspective, you can get down here on the 5-15 minute, and you're looking for those higher lows, right? Here was opening print. Here was the higher low on the 15. You could have entered here. This is the equal low. You set or maybe it was a little low. Actually, it was a lower low. So you had a lower high, lower low. But again, we had our stop set at opening print, so that allows you a little bit of wiggle room. You stay in, and then you're rewarded to the upside. So, keep that in mind. That lower high on the 15 allowed the 1 hour to get that little poke down for that higher low on the 1 hour, and then we pushed up, right? So once you get that 15 and you've got a pullback level of opening print down here, you can go to the 1 hour, and you can see you've got a little room to make that higher low, stay in it, and you're out. So yeah, very precise levels. Let's look at it from the day perspective, get our day triggers and targets going. There's our scalp level. And actually, let's go to our 4-hour level here, or day trade level here. There we go. So we've got the 3 on the day. And again, no matter what we do, we're setting up a reversal pattern. Whether we stay inside and go 3-1-2 down on Monday, that's a reversal, 3-1-2 down. If we go inside tomorrow for a 3-1 and then we go 2 up on Monday, that's a reversal. So we'll have very clear entries and exits. Even if we go 2 up tomorrow, especially if we go failed 2 up tomorrow, that leaves the door open for a 2 up, 3-2 up, 2 down, which is a strat reversal. Or if we go 2 down tomorrow, that leaves the door open for a 3-2 down, 2 up, which again is a strat reversal, very clear entry, very clear exit, right? So tomorrow to the downside, if we get the 3-2 down, it's not a strat, it's just a continuation. It's more of the 4-hour reversal at that point. But the 3-2 down triggers at the low of today, so 27.95, which is the magnitude of the 4-hour, right? We then have a target. Let's bring out our targets to the downside. Here are our targets to the downside. And it'd probably be pretty easy to hit that 2770 first. So we're going to leave this third one on there, 27 flat. The 2 up, 2 down, that would give us technically a combo 2 up, combo 2 down. That's kind of making it a stretch. That gives us a magnitude of this candle, which, is last month's 50%, last quarter's high. It has the possibility of doing that, but, we're in a pretty big uptrend right now. We already made the higher low. Again, it is a soft higher low, so maybe we do come down to set a real solid higher low above this support level. But maybe not. Our far extended target for that then at that point will be 25.68. Again, that's a pretty big move. I don't think we see it. We'll leave that out here that was an extended. This would be a 3, green 3, 2 down. Or if it goes past, a certain point, this 27 flat, we may be looking at the 2 up, combo 2 down with the magnitude of 25.68. So we'll leave that out there. I don't think that it'll happen. The higher low at this point is 27.95, so we will put that out here. 27.95. We'll take a couple of these off here. That's a little much. All right, so let's look to the upside. That would be a 3, 2 up. All right, green 3, 2 up. Triggering at the high of today, which is 29.66. And then we've got our extended targets here. We will leave, actually, no, this is what we're going to do. We've got 31.47. It was significant for today, so we'll leave it there too. And then we'll just put this 31.96 out there. All right, so we've got our highs marked out at 32.64. Again, we've already ran the strat on the week, the 2, 1, 2 up. Triggered at 25.88, magnitude was 28.16, so it's already completed. So from here on, any further upward movement is like a cherry on top from a weak strat perspective. We did, however, go green 3 on the month, so that's another bullish signal, and it is still in force. We're still above 28.50. We're still in force on the quarter with the 2 down, 2 up. It triggered at 25.84. It has not reached its magnitude yet. The magnitude on that is 36.15. So, that's why we've got some January 2026 contracts as well. So it gives us a little bit more flexibility there if the quarter wants to just keep pushing, right? Those contracts are already in great profit, and it would just be even better if it continued to go up. So gives us some flexibility there. The one thing we do want to note is we did just make the year green, so we'll turn that green. And why aren't these green? Those are supposed to be green too, so sorry about that. But we did trigger the 1, 2 up, 2 down on the year, right? It triggered, it went below 23.50. We hit a target of 919, but it did not reach the magnitude of 621. So if something crazy were to happen and, markets just go into distress, there is still the possibility of reaching the magnitude of the 1, 2 up, 2 down on the year, which would be 621. So if we get there, I'm, definitely buying more shares and selling puts selling calls on the way down, buying puts. But, that would be a lot of levels to break through to the downside support that we put out there. Although there is some, I guess you could say, thin structure from a week perspective, right? If we look at the week, we had those 7 straight green weeks, right? 1, 2, 3, 4, 5, 6, 7. So there was a little bit of fighting here, but a little bit of thin structure here, a little bit of thin structure here. Who knows? We could pull back to last quarter's 50%. Wow, what is that? What do you notice? That lines up with this weekly uptrend line, right? Who knows? We may even wick down through here and close this gap before we bounce, that would definitely close this gap. So we've got, there's definitely downside that can still be had, right? This shows that, let's get rid of that. That's a more clear chart. So it still shows we've got a little bit of thin structure here, but it should be a good level of support here, if not here and then here. But, I keep saying here, and going down, it's, whatever. But that's right now. It'd be hard to break that. We're in a weekly uptrend. We're in a daily uptrend. We're in a monthly uptrend, or the start of a monthly uptrend. So the start of a quarterly uptrend. So we're looking pretty bullish right now. Again, we need to find this good support here at 28.13. If we get a little bit of pullback tomorrow, that's fine. We've looked at it from the 4 hour and the day perspective. We're looking at it from a more zoomed out perspective now, right? We've got plenty of uptrend that we're working with right now. We get into a little bit more trouble if we just have a horrible day and we just turn the week red. That's definitely a bad sign. But even if tomorrow is a pretty big down day and we don't go red and this is just an inverted hammer, I mean, that brings back in onto the table the 1, 2 up, 2 down. So we want to be cautious of that. Want to make sure we see how the week ends. Yeah, it would be great if we can profit off of puts because that's where price action goes tomorrow. But we don't want to remain too zoomed in and forget that, maybe we want to buy some cheap swings for the weekend. Maybe not, not buying next week's expiration, but the September, maybe the first week of September or even September monthlies to just swing over the weekend because maybe next week we do go 2 down, and then the magnitude of that is the candle to the left of the 1, which puts us back at this gap. So we could be coming back down to close this gap. If we do that, we're back down below this monthly downtrend line. That would put us back, or not back, but that would put us below this weekly uptrend line. So that would definitely negate the upward trend that we're in, and it would start more of a broadening formation at that point. Oops, let's get the right stuff here, right? This would be there, and say it came down to here or whatever and bounced, right? Then we've got a broadening formation that we've got to deal with, not just it's not an uptrend, a clear uptrend, right? We've got to know that we've got to at least break back through halfway through the broadening formation to expect to get back up to the top of it. And if it doesn't, then we can expect more downside pressure, right? That just brings a lot more downside on the table. And I'm not saying that's where we're going, but we need to be aware of that stuff. So right now I'm pretty bullish. The day's finished off with the squeeze, so that's a little hard to judge, especially with that last 5-minute candle or whatever, it wicked back down. So just be aware of that. And good luck tomorrow. If you do play 0-day expirations, good luck to you. Don't stay in too long. Don't take too big of a hit. Try and give yourself as good risk to reward as you can. I think one way of doing that is using the strat. So again, if you want more information on that, check out the links in the description. Check out the video and the bonus content for precision trading. And if you like this video, give it a thumbs up. It really helps us spread the word about not only the trading method, which I like to use that's based in the strat, but with my little nuances added on top. But not only spreading the word about that trading strategy and charting strategy, but spreading the word about SOXL, right? It's a real economic way to get in for some real possible big upside. One of the best ways to do that. So good luck with your trading tomorrow. Make sure you get some good rest tonight, and that way you're fresh for tomorrow. And we'll be back. We may do a video tomorrow night, depending on how the day goes. If it's a big trending day, maybe we'll jump on for a few minutes and speak about that. Otherwise, just be on the lookout for the weekend video. I'm going to try and get that out on Saturday this weekend, or from now on instead of Sunday. But yeah, that we'll get that out as soon as possible. So make sure you've got the notification button hit. Make sure you're subscribed. That way you're notified when we drop that weekend video. That's a real important video for lining everything up for the coming week. And so I don't want you to miss out on that. So again, if you like the video, give it a thumbs up, subscribe to the channel, and we'll see you tomorrow.